Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Rithm Property Trust. It's like looking at a house flipper's accounts, but instead of paint and drywall, we're talking about mortgages. Let's see if they're building an empire or just another bubble about to burst. First, if you like getting the story straight from the corporate horse's mouth, hit subscribe. We've got a Discord community linked in the description. Join in. So what's this report about? It's their 10Q, basically a financial checkup for the first 3 months of 2025. We're going to peek under the hood and see how they're doing. This report covers the period ending March 31, 2025. That's the time frame we're focused on. Now, before we get into the numbers, a quick heads up. This report is full of forward-looking statements. That's corporate speak for we're making predictions about the future, but things could change. They list a bunch of potential problems like interest rate changes, economic recessions, or even bad weather, which can mess with their investments. It's basically the company covering its behind just in case. All right, let's get to the real stuff, the financial tables. First up, let's quickly glance at the balance sheet. This is a snapshot of what they own and what they owe. Total assets are a little over $1 billion. It seems like Rithm has about $732 million in liabilities. The difference is how much the company would be worth if all debt was paid. Next, the income statement. This is where we see how much money they made or lost. Revenue was pretty close to zero. Their expenses outpaced the income and they lost a little over $3 million. They lost about 8 cents per share. That said, the amount of outstanding shares increased by a lot compared to last year. Almost 50% more, meaning previous shareholders are diluted more and more. Okay, how about the cash flow statement? It shows where their cash came from and where it went. They had about 33 million more in cash at the end of the quarter than at the beginning. They made a bit of cash because they issued some new preferred stock. So what does Rithm Property Trust actually do? They used to focus on buying up reperforming and non-performing mortgage loans, but they've shifted gears after a deal with Rithm Capital. Now they're aiming to get into commercial real estate, which is a whole different ball game. This strategic transaction brought in a new manager, RCMGA. It also involved selling some company stock and issuing warrants, which are basically options to buy more stock later. It looks like they changed the management structure and who's calling the shots. Seems like there weren't any big accounting rule changes that messed with their numbers this time around. They operate in two main areas now. There's the residential segment, which focuses on home mortgages and the like. Then there's the commercial segment, which is all about commercial real estate. They also have a corporate bit, which is where they lump all the general expenses and stuff that doesn't fit neatly into either of the main segments. So looking back at March 31, 2025, the residential segment is doing quite well for itself with an income of 3 million and corporate had a loss of 6.8 million. Let's talk about their mortgage loans. During the period that we're talking about in the financial filing, it appears the company did not sell many loans, but rather was collecting payments from previous agreements. Most of their loans held for investment are older, originated between 2010 and 2020. This kind of informs us about the market they're trying to tap into and how old their business model is. The company does not anticipate and did not adopt any changes to rules from the Financial Accounting Standards Board. They need to measure the fair market value of some of their holdings. There are some assumptions on the actual values that needed to be stated transparently. No significant changes to the original statements here. Where's the company at with their debt? Caxed for the debt part, it seems like the maximum interest rate they can get at these bonds is somewhere around the range of 5 and 7% right now. They took about 1 million in income to pay it off. Turns out Rithm isn't just managing them, they also have ownership through their management company. That's a classic related party situation. It is important to note that the managers of the investment company have an outsized effect on the success or failure of the company. As of the time that the report was produced, there were about 45 million shares available. The company lists commitments as well, including that it's still possible for new stock to be purchased via Rithm. A dividend payment to be made in May. They have some plans to pay something out, but the details were not fully worked out. They believe their internal controls are effective. Basically, they're saying they have the systems in place to keep track of everything and make sure the numbers are accurate. But like the forward-looking statements part, this is for compliance and can't be fully taken as fact. Okay, that's a quick rundown of their 10Q filing. So what does all this mean? They're shifting from residential mortgages into commercial real estate. They're having a loss, but they're not running out of cash. It looks like expenses are coming down to be a more sustainable level, and they are starting to look for returns from new areas. Now, my take. Rithm Property Trust is betting big on commercial real estate. This could pay off if they can navigate the changing market, which will likely have fewer home loans to be paid. Cite a few concerns I am noting. They're still losing money, their revenues are low, and high expenses are not the recipe for success. It feels like Rithm wants to transition in name only, and still keep their own people at the helm as a business partner. Overall, I think Rithm is making some smart moves to transition, but ultimately they are doing that on the market's dime as well as their own, so you have to trust their expertise in an industry that's historically more unstable than housing. Alright, that's our breakdown of Rithm's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out the Discord in the description. It is a great place for discussion and to share all these findings. Thanks for watching. See you next time.